Welcome back, you lovely people. In today's video, we will be analyzing today's massive sell-off. I mean, we were down 20+% earlier in the day, and we will try and figure out what is going to happen next for the rest of this bull run. Let's check in on current price, down 11.3%, 46,700. Now, at one point, we were down a lot more than that. So we were actually down 18.6%, down to just under 43,000. Now, what caused this is kind of irrelevant, and I don't really want to spend any time on it. The biggest reason is liquidations of leveraged positions as usual, and as was the case during our sell-off over here. And you'll hear all sorts of other theories, but the thing is, it doesn't matter because following price is the only thing that matters. We cannot control the market. We can only manage it to the best of our ability. So what is interesting about this sell-off? Well, a few things. Firstly, the level we came down to, just under 43,000, was a key level over here. That's where we came in to test the most important trend line in crypto, and very close to where we broke out earlier. And we have been talking about potentially coming in to test the most important trend line in crypto. We had a box in here, which we haven't quite made it, but we have come into that sort of level. Now, obviously, we've been monitoring our upward sloping channel. And of course, this is a major break to the downside. But I would note that the day is not over yet. We've already recovered from the bottom nearly 10%. This is a really important level here at 47,000. And if we held this level on the close, it would not surprise me to see us regain this channel. Now, I'm not saying that's my base case. At the moment, I don't have a base case. We are watching and waiting. But it wouldn't be a surprise if tomorrow or Thursday we were back in here. So what we'll be looking for is whether this is the end of this channel or a blip. Of course, quite a large blip, but it may just be a bit of an anomaly if we come back into the channel quickly. And if we do, then our target's still in play, 60 to 64,000. If we don't do that, if we don't regain the channel tomorrow, latest Thursday, then channel one or wave one is certainly over, and then we'll be looking towards the second channel. Now, let's have a quick look at 2017 and 2013. So here in 2017, we had channel one, and then we had a breakdown. Of course, it looks different because it came from the top of the channel, and that's why we're expecting it this time. But regardless, we had a 40% breakdown, which when, if we look at the breakout of the most important trend line in crypto, didn't even quite make it down that far. So we've already had the breakdown has already gone a bit deeper than what we experienced in 2017 in relative terms, although it was 40% because we went higher. So it's just interesting. It's not lining up perfectly. Today is unexpected, so things are bound to not line up. But what we had in 2017 after the breakdown, which lasted approximately 2 weeks or a week and a half, is that we then began our second channel. And you see a very similar pattern after that. We had a 4 or 5 day breakdown, and then we began our third channel. So if we are finishing with channel 1, we're looking to head into a second channel. And how do we know when we're in that channel? Well, we can create a new most important trend line in crypto. We'll go back and have a look at that in a second. In 2013, I think is actually a lot more interesting. So in 2013, what I'm looking at is obviously we had the first channel, but this looks a little bit different because we had this sideways movement last time, but we did have this candle here in 2013. Now that looks suspiciously like the one we have just had today or are having today. Again, it was deeper last time. It went to 33%, but notice how it also, in fact, let me draw a line here. It came in to touch the breakout of the most important trend line in crypto. That looks very, very similar to what we're experiencing today. The wick down to the level of the breakout of the most important trend line in crypto. So what happened after this this candle in 2013? Well, you can see I've added in here, which I'll draw in again so you can see it. The trend line that covers the previous all-time high and the top of that candle. Looks a little bit like that. And then what happened after the candle last time? Well, we had a wick down, and then the day after and the following days, it was all up. I mean, a lot of the recovery was done the next day and the day after. So we'll be looking at that, looking to see if we get that this time, but didn't make it back into the previous channel, which was here. And then once we had broken this trend line, which I've just drawn in, which we'll draw in on in 2021 in a second, then we took off. And you could say in some ways that this was lift off into the parabolic blow off top. So from the breakout of this trend line, this was on the 10th of October, and we peaked 51 days later, so just over a month and a half, and went up 820%. If we head back to 2021, and I'm not saying that this is happening, but this would look something like this. And what if that was the case, what we would be looking at is somewhat of a recovery over the next few days, and then to break this trend line and start heading up here, and then not to really look back. If this is lift off, let's say in a week's time or so, then 50 days, you're looking at end of October, beginning of November, into the all-time high, without another major pullback. I mean, sorry, I may need to rephrase that. There were pullbacks, but they weren't very long. So at that point, after we break this line, any pullback really lasts a couple of days maximum. You can see this one here, here, a couple of days. This one was 1 day. This was 1 day, and then into the cycle peak. So it would mean, you know, if we are here, it would mean we're probably a lot closer to the cycle peak than a lot of people believe, but it would align with our previous targets. So we're now going to be watching this really closely, of course. And for me, just to recap, what's going to be very interesting is if we come back into this channel quickly and continue, in which case we're looking at 60 to 64,000. B, if we recover relatively quickly, but not into the channel, and then break this trend line, at that point, the base case would be that we're heading up to the cycle peak in a month and a half. And of course, the third scenario is that we consolidate for much longer. Maybe we go even further down, in which case we're then looking to begin the next channel at some point. The line would probably end up, or it would end up looking, let me try that again, I need to connect these dots or something like that. I can do that even better. Oh, I want to get it perfect. My OCD. You get my drift. So when we come in here, and that means we're confirmed that we're back in channel number 2. And if it was that scenario, so scenario C, then that would mean that our cycle peak is probably heading well into December at that point, because it's going to take some time for that to play out. So 3 scenarios there for us to follow. And we'll know a lot more over the next few days, because the price action, particularly Wednesday, Thursday, Friday, will really give us some very, very a lot more clarity than we have right now around where we are going next. So it's definitely really, really interesting. The good thing is that I've been preparing everybody by saying, prepare for the volatility, and this will likely be the most volatile bull market so far. And therefore, we are not surprised to see a day when we're down 18% at all. In fact, we were already prepared for it. So thank you everybody for your support, for liking the video. Please share it, and I'll talk to you soon.